Hello everybody, Jackson here with the Wealth Squad. Today we're going to be talking about 3 ways to analyze a single stock. We're going to look at Meta or Facebook today just because it's a company everyone knows and it's a company that's been beaten down quite a bit, to say the least. Right? We're going to look at the stock chart here. We're going to look at the financials as well as the SEC filings. We're going to get all into the nitty-gritty with this stock, trying to understand it more. Because that's the whole part about analysis, is trying to understand the company more and what way it is headed. First off, what you want to do in order to analyze the stock is, first and foremost, look at the stock chart, right? Is it a good entry? Is it not? Is it, it could be up here, and maybe you think that's too high. You like to buy at a discount, so you wait. It could be right here at this current moment. You'd be like, wow, that's a significant discount. Might be time to buy. Then you start drawing these trend lines. You look at for support and resistance. This is resistance, which can then act as support, and could be acting as support here. We'll have to wait and see. You could look at, of course, the price decline. What type of discount are you buying this at? 66%. You're buying it a third of what it was trading at before, 2/3 off. So basically what you want to do is just look and see if you're getting a discount. It's not very important all the time if you are, but for some people it just feels better, right? You want to buy something for $70 that's usually 100 rather than something that's 70 that's usually 70, right? It just makes sense. So right away you want to look at the stock chart. It's very important for some people, not so important for other people. You don't have to do this in a pattern. You have to do 1, 2, 3. You could do either way you want, but all these ways are actually helpful. So look at the stock chart. Number 1, see if you're buying at a discount. Next, you go to macrotrends.net, which is essentially a compiled information database of all the past quarterly and annual filings. This just makes it easier to look at. All right, so of course it shows the basic stuff: stock price history, market cap, stock splits. Then we get into the financials, and this is what you would see on a SEC filing, right, for a quarterly report or an annual report. Not too easy to look at, but that is why we have, of course, you have the other ratios. Now you have the actual data chart, and this is very nice to look at. You can see here the exact growth in percentage points. You want to see the quarterly growth here, and you want to see the annual growth here. So you can see annually it's shrinking a little bit, and you can see that in the quarterly as well. So that's something you can't really perceive from the actual data set here. I'm sorry, in financials. So we could just look at a couple more here. Gross profit, growing nice. Operating income. All right, growing, recently kind of shrinking, something to be aware of. EBITDA, net income we could look at. Okay, last three quarters, it's been shrinking. Okay, some to know, some to write down, or last 3 years, and that's year over year. And earnings per share, this is like the most basic data set that you could look at, but it is shrinking, right? It's at $12.04 a year compared to $14 just a little bit ago. You can look at the past 5 years, you can see that, and that's a quarterly basis if you don't know, obviously. So let's look at assets and liabilities, because with this company, I know it's a problem is the cash burn spent on the VR research, and that's R&D, research and development. So that's something to look into, right? We're looking at total assets. Their assets are growing, awesome. Cash on hand. And like I was saying, the cash on hand is shrinking. They are burning their cash researching further VR developments. That is their side business that they're trying to make their main business, thus renaming themselves to Meta for Metaverse. So at one point they had $64 billion in cash, which is a ton, right? It's a social media company, not much spend on products more, besides digital products and improving the digital landscape. You don't have a legitimate product in your hand that they sell. It's all online until, just recently, the VR, Oculus, all that. So 64 billion, now we're back at 40 billion, so down 22 billion in cash. Okay, you can see that percentage growth. Long-term debt, hopefully they don't have long-term debt. I know they haven't in the past. Okay, yeah, they still don't, which is good. Once a company gets into too much debt, that is when they go bankrupt, right? Of course, every company is going to have liabilities. That's just part of a company landscape and part of growth is improving liabilities, which is not really improving since liabilities is taken away. But regardless, you can see the liabilities are growing with the company growing, as well as the other side business, research and development for the VR space. Then let's look at margins. Let's see how their core business is doing. Profit margins are at gross 80%, operating margins 33%, net 28%. Okay, and you can see that's on par with a little bit ago in terms of net and operating. We could look at net margin, which is pure profit margin. Net income as a portion of total sales revenue, and you can see that is going pretty well. So far we have seen that cash is the scariest thing, the cash burn that this company is using for research and development purposes. And this is a PE ratio, of course, with a stock falling. The PE ratio does, well, you can see right here, it's kind of skewed, so we'll do this. Here we go. PE ratio falls once the stock price falls, as well as when the earnings stabilize. Let's say the earnings fall right with the same percentage as the stock. The PE ratio doesn't move. Okay. Let's say the stock jumps, the EPS stays the same. Well, the PE ratio will rise because the stock price is more than what it was compared to the EPS. EPS is earnings per share. So $12.04 is what they were earning per share, and prices were 161, thus making it, you can see right here, 12 over 161 equals 13.39. And once that price keeps getting lower, then this end result keeps getting lower. So they lower the PE ratio, the better, as long as the company doesn't have any internal problems. We could look at the price to free cash flow ratio. Also pretty low, which is good. And when you're trying to buy something, you want a lower valuation in order to do so. Current ratio and quick ratio will be good because the company doesn't have any debt. Same with debt to equity. If you look at the return on equity, and it can be defined as the amount of net income returned as a percentage of shareholders' equity, and we want that to be, yeah, that's pretty high. It's usually above 15% is what you want. 26% is very good. So far we've only seen pretty good things, except for that cash burn, which of course needs some context. So let's look at that, right? What you have to do, and this is pretty not difficult, but not super self-explanatory. You look up sec.gov EDGAR, all right? You click on the first link. It will bring you to this site, U.S. Securities and Exchange Commission, SEC. You click this link right here, search for company filings, and you search for keywords and phrases. And this is when you could look up the company ticker symbol, right? We'll look up Meta. And this 4 is insider trading. We don't really care about that. Current report, the 8K is news. We don't really care about that. So what we want is annual, quarterly, and current reports. I guess we could just do annual and quarterly, but I don't know if that's an option. So we want the 10Q, which is the latest quarterly report that Meta has put out. Open document, and now you have an SEC document at your fingertips. Now what we want to look at, and what I think is kind of concerning, actually I'll find it here. So this is company stock purchase. So this is when the company buys back its own stock because one, it restricts that shares outstanding, making the shares more valuable in practice, right? Theoretically, as well as if the shares do go up, they make money on that side, right? They have a lower valuation on their own company rather than not owning any of their company at all, which is kind of a red flag. Okay, so you can see right here, total number of shares purchased in thousands. So take this times 1,000, and you add essentially 3 zeros. So you're looking at what, 10 million shares? Is that right? So 10 million shares they purchased between April 1st and April 30th for an average price of 207. Another 10 million shares they purchased from May 1st to May 31st for an average price of 197. And another 4.8 million shares between June 1st and June 30th for $175 on average, right? So they bought $25 million shares, $25 million shares for an average price of, what would you say, 190? I think that would make sense, 190, right? Facebook is currently trading for 127. All right, so that's some context. No wonder they're burning through a ton of cash. They just spent, 25 million shares. I wish it showed a price, this times that, but whatever 25 million times 200 or 190 is on a stock that is now 130, and it's their own stock, which is even worse. But anyways, guys, I thought that was gonna be interesting. So what you want to do in this type of quarterly report is skim through it. You want to see anything that essentially catches your eye. So we'll skim through it right here. Facebook metrics. They're talking about their weird metrics that they use. Monthly average users, stuff like that. We can see the financial results from last quarter to this quarter. Not good. You can see a decline in the asset sheet. Total assets did increase. We can see here in millions. Okay. That increase as well, of course, to equal it out. That's the balance sheet. This is the income statement. 6 months ended. And this is like 6 months, and this is the actual quarter. You can see improved. Good, right? Not too bad. Now we're looking at comprehensive income. So that has gone down quite a bit. And you can kind of just, here we go, stockholders' equity. What we want is, I want them to talk about the cash burn on the research and development. So the cash flow statement of cash flows. Here we go. Here's revenue by, here we go, yeah, revenue by source, right? And they usually give us a percentage, but advertising, they made 28 million, right? Yeah, in millions. So that'd be 28 billion, and plus another 452 million, 218 million. Reality Labs is VR, so 28 billion, sorry. And you can see just on here where that came from and what part of the world. United States and Canada account for most of it. Europe, Asia Pacific account for the rest, and then the rest of the world is a small percentage. Net income, that's for EPS. Cash and cash equivalents. All right, so here's something. This is debt due within 1 year, due after 1 to 5 years. So not very much. That's in millions. Okay. All right, this is interesting. This is the property and equipment, but you have to realize that Facebook is a digital company, so there's not going to be much tangible equipment that they have to sell off in order to create cash. So accumulated depreciation is just what happens with equipment and land, and not land, I'm sorry, buildings. And you can see they own some buildings here, and some land, some server network assets like the big tech blocks you see in like cold storage, equipment, right of use assets, construction in progress. Cool. That has not much to do with it. You know, it's a digital company. Debt, goodwill, so that's then giving money to charity. Patents, cool. Let's just, all right. Okay, our board has authorized purchase of Class A common stock. We would purchase and retired 60 million shares of Class A stock. Yeah, so they're just talking about the repurchasing. Cool, which actually was a bad idea because they bought at 190, right? Okay, I'm gonna scroll up here. We get skip to right where we want to. So we want to talk about the risk factors. So you could read this, and that's just going to be, of course, a summary of the risk that this company is facing. And after you read that, you have to ask yourself, do you still want to be in this company? Of course, there's a lot because they're dealing with a lot. Yeah, it's a tough read, but if you are into it, then you know it's pretty dang interesting. And here you can see some solid news, not necessarily news, but some solid information. We do not intend to pay cash dividends for the foreseeable future. We have never declared or paid a dividend of capital stock. Currently intend to retain any future earnings to finance the operation and expansion of our business. Blah blah blah. They're not paying a dividend anytime soon, especially now with the stock being hurt so bad. And of course, talking about more of the share rebuyback program. Yeah, guys, this is just the 10Q. So this is the quarterly report. Think of the annual report, how much information that holds. And I barely got through half of this. You know, I just skimmed it for you. But this is available to you anytime for free, sec.gov Edgar. All right. Hopefully you use that. It's a very valuable resource, which I found quite a bit of information in just by skimming through. You know, if you want to get a deep dive, get some tea or coffee in the morning and go through a whole 10K, 10Q, whatever. That'll just carry a lot of information for you, help you in the long run as an investor. So hopefully this video helps you guys. You know, you can look at the stock price chart, you look at the metrics on macrotrends.net, or you can look at the real data brought to you by the SEC. Thank you for watching, and until next time.